Hello. Welcome to my channel, my dear friends. My name is Avinash and I'm a trader next to. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, the market is open and we can see that market is behaving like a normal Monday market. There is not much volatility after the market opening. So after forming the high around 2026, 2027, we can see that there is weakness on the market. So we have discussed in detail in our previous video. So my dear friend, if you're looking for detailed analysis, then please watch the video that I uploaded on Saturday. I do not want to repeat the same stuff and bore you again. So market is going down, forming a lower high here. So the formation of lower high signifies that sellers are slowly have an edge, or they are developing an edge, or they have the upper hand. So there is a high chance that market will break the support and go down. And where is the support? The support of 2020. 2020 was not a major support, but this bounce, okay, gave a clear signal that we have some strong bias around 2020. So it worked as support again. Right now, we need to see whether the support works again. And now see, one more thing we need to understand here is that to break any level, whether it's a support or resistance, doesn't matter. To break any level, market requires volume. And if you see the market hits 2020 during the Asian session, usually Asian session doesn't have much volume, so you can expect that market will take some support for 20, 25, 30 pips around the area. If that happens, you can go for a buy. But on the other hand, if you see that market is hitting 2020 on the US session, usually during the US session, market has higher volatility, higher volume. So if that happens, then there's a high chance that market will break the support and market will go down. Okay, so one level, but two different scenarios, and that depends on the volume. And where is the next support on the market? The next support on gold is around 2015. Okay, 2015 as a day trader, we can expect a bounce around the area, but otherwise the trend of the market is not very strong. Okay, and right now we do not have any signs of trend reversal also. And if you look at the market sentiment, you can see gold stalls in thin trading, eyes on Fed in data pack week, gold steady in holiday thin trading. Overall, there is not much volatility in the market because of the holiday mode, and moreover, there's a good chance that market is waiting for the upcoming CPI coming up tomorrow. So yes, there is a high chance that we may see a sideways kind of a market or choppy market till tomorrow. If you look at the US dollar index, my dear friends, we can clearly see that on the dollar index also there is not much activity. Dollar index is also trading inside a range only, and before CPI or till tomorrow we can expect the market to stay inside the range. Let's see what chart prime is saying. It's been a long time we talked about chart prime, and those who don't know about chart prime, it's a custom indicator, probably the best custom indicator in the market right now. The website was not working efficiently for the Indian clients. The payment was not going properly. The team has worked extremely hard and they have come up with a new website, chartprime.in, and now you can see the chartprime is back again. They have a cool bunch of indicators, and the best part is that they are really powerful. Those who don't want to be dependent on trading telegram signals and who wants to become an independent trader and develop their own edge, chart prime can be a big help. You can see the reviews are also pretty clean. Okay, today I'll be showing you their chart prime oscillator, probably the powerful oscillator or the most powerful oscillator I have seen till date. Unlike other oscillators, it not only shows you the oversold, overbought levels, but it also shows you the divergences in the market. So if you want to trade on divergence, or if you love to trade on divergence, then it can be very useful. You can see it also tells you when the trend of the market is about to reverse so that you can trade accordingly. So you get a lot of signals from this chart prime oscillator, okay, from their overbought, oversold levels, the divergences, and the trend reversal levels here. No indicator has 100% accuracy, or no trading strategy has 100% accuracy. We know it very well, but their accuracy is pretty good, and you can expect that with proper risk management, obviously you can take your trading to the higher level. For details, you can go to their tutorial section on the website and you can see how powerful they are. They have made a bunch of videos where they have explained pretty well about the indicators. They have a 7 days money back guarantee. So at first you can go for any premium monthly subscription. And if you are happy, then you can continue. And if you're not happy, if you feel that your trading requirements are not met by the indicator, obviously you can ask for your money back. You can check out Chart Prime for 7 days and change your trading. The link will be in the description. Okay, so let's try to wrap it up. The trading opportunity is very fast. So because of the upcoming CPI, there is a possibility that market may remain sideways. So we can expect that if market falls also, we have support around 2000 to 2002 and market should not go below this level. And during the US session, if you see market is going below 2020, then the next support will be around 2015. And if you see the market is taking support, market is showing price rejection from below, you can hit the buy button, but do not expect much because 2015 is also not a level from where you can expect a complete trend reversal for a couple of days. Okay. So if you see the market is showing price rejection from below, if you see market is taking support, you can go for a buy. But if market breaks 2015, then market will head towards 2010 and eventually 2005 and 2011. And right now we can see the structure of the market is not very positive because market is continuously forming lower highs. So yes, further downside is still very much possible. And if market goes up, then the trading opportunities or resistances that we discuss are still the same because there may be many structural changes on the chart of gold on the hourly time frame. But if we go to the higher time frame, like for us, we can see the market is sideways. Okay, so in that case, do not expect huge trades from the hourly time frame as of now. Maybe you'll get an opportunity for 80 pips, 90 pips, 100 pips, and you may think, Avilas, you are wrong. Okay, but no, there are many people who target 400, 500 pips. Okay, for them, I'm saying that overall the market is sideways on the higher time frame. And the best resistance on the chart of gold is still around 2044 to 2040. And I don't think so in this market condition, market will have the strength to break the level. That's why we need to focus on 2034 to 2035 as of now. And if the volatility of the market remains like this, if during the US session also, if you do not see much craziness and you see upside, you can expect the market to face resistance around this area. In case you see the market is market is facing selling pressure around 2030 also, you can go for a sell, but yes, your stop loss will be bigger. Okay, 2030, 2030, 2029 is still a resistance for us. So you can see that due to the choppy nature of the market and due to the low volatile nature of the market right now, we have many resistances. Okay, but having many levels doesn't mean that you need to trade on each and every level. No level is permanent, but our capital is limited. Do not forget that. So do not gamble with your capital and hard-earned money. And if you're looking for detailed explanation why we are talking about these levels, then watch the video that I uploaded on Saturday. Okay, and nothing much to talk about the market right now. Overall things are still the same here, and let's wait and watch, and we can expect the market to stay within this range only till CPI. And if you see the market shows momentum, or if you see the market is very volatile by the US session, try to follow the trend of the market instead of looking for reversals. We all have a tendency of predicting the top and bottom of the market, but it is not possible. If you are a follower of Warren Buffett, if you believe that okay, he has done something, then okay, at least if you do not want to listen to me, at least listen to him. In numerous interviews, he has spoken that it is impossible to predict the tops and bottoms of the market. So don't try to do that. If you see market is volatile, try to follow the trend of the market. Okay, trend is your friend. That's all from my side, my dear friends. Thank you so much. Bye bye. Take care. See you tomorrow.